welcome to another episode of Always Up to Date. My name is Denise Mitra, and this is Yahweh Matuganis.
Yeah.
Okay, all right, good. And we are co-owners of Always Bookkeeping. So Yahweh, last time we talked about what should be on your balance sheet. So this week we're going to talk about what should be on your income statement.
Okay.
We have a quote today from Warren Buffett, who's an all-time great investor. And his quote is, "Accounting is the language of business." And the statistic that we have is from the Fraser Institute. So the average Canadian pays 43% of income in taxes, which is like tax, CPP, EI, GST, fuel tax, etc. And by comparison, on average, only 37% of the remaining income goes towards basic necessities, such as shelter, food, and clothing. So often, business owners don't know how to read their income statement, don't really know what should go on the income statement, and therefore they end up making decisions based on incorrect information.
Mm-hmm. So I have a few questions that you might want to ask yourself when you're looking at your income statement, and then Denise and I will kind of discuss what are the answers for those questions. So the first one I have is, how many income accounts should a business have?
Yeah, so really there's no rule on how many you should have. We recommend no more than 3. Usually a business has one main product that they sell. And it could be a product or a service. And so sometimes they can be broken up into different categories. If you have that in your business, then we would recommend trying to figure out what the main 3 are and using those as your income accounts.
Yeah. Should a business have cost of goods sold accounts?
So it depends on the business that you have. Lots of businesses such as accountants or lawyers, those type of businesses that are more of a service, don't usually have cost of goods sold. It's more if you're in an industry like construction or plumbing or those types of industries, that's where you would have the cost of goods sold.
And especially for merchandising businesses that actually sell retail items.
Yes.
So your cost of goods sold would be the item that you actually sold. For businesses that have services, it's very rare that you would have a cost of labor, because most of the small businesses operates with just one person, which is the owner.
That's right.
So it's a little harder to track your hours unless you're tracking an hour just for the purpose of doing the service and not necessarily the back admin.
Yeah. That's right.
So how many cost of goods sold accounts should a business have?
Yeah, so your cost of goods sold accounts should sort of correlate with your income accounts. So if you have 3 income accounts, we would recommend having 3 cost of goods sold. Sometimes, again, there might be some more. Depending on what kind of products you sell. But often, if there's an income account and a cost of goods sold account, they should kind of correlate with each other, just so you can keep track of what's going into, like what you're selling that correlates with that income that you're bringing in.
And especially looking at your profit margin, you wanted to make sure what actually is available for you to pay the overhead or any admin items that you're paying. So if you're looking at your income and your cost of goods sold account, you want to make sure that your cost of goods sold kind of explains your income, especially the profit margin that you're trying to target.
Right.
Yeah.
Good.
What is the difference between cost of goods sold and expenses?
Yeah, so like we said, the cost of goods sold kind of correlates with your income. So basically what it is that you're paying the money to get sort of the expenses that go with your whatever product you're selling, but you're going to get that back with the income. So your client is going to pay you that back sort of in your invoice. Where an expense is more the expenses that you need to run your business. So if you have rent, then that's an expense. It's not a cost of goods sold, because it's not correlating directly with an income item. It's something that you generally need. So whether you sell a product or not, you still have to pay rent. So it's kind of, those are sort of the fixed costs. In a sense, not all of them are fixed, but in a sense it's kind of more fixed because it's based on you just have to have it to run your business. Yeah,
absolutely. And you want to think of your direct costs and what really is in a sense direct costs are the ones that actually are touching your product. So who's making your product? That's your cost of labor. What is being sold that's your direct material, or what makes your product, that's your direct material. So that's kind of those are the kind of stuff that would go into your cost of goods sold.
That's right.
What expenses should be included in the income statement?
So like we talked about, the expenses are anything that you're going to use to run your business. So if you have rent, if you have employees that you need to pay, you might have, like if you drive places, you might have
some gas,
like gas or all of those kinds of things need to be in there. Office supplies, if you do a lot of mail outs, not many people do that nowadays, but possibly any advertising costs that you have, those are all expenses that go into the income statement.
What can be posted to meals and entertainment?
So meals and entertainment, it seems pretty obvious. But one of the things that a lot of people get messed up on is that they think if they own a business, they can eat out every day and just charge it to the company. But really, you can't. If you work somewhere where you're close to your home, you're not traveling a lot, maybe a couple of meals a week as overtime meals you can claim, but you can't claim meals for every day. Again, it has to be sort of based on how much income you're bringing in. And now it's different if you work out of town, if you're traveling a lot for your business, if you're a salesperson, say, and that's a big part of your income is to travel, that's a different story. You can claim more meals, like daily.
Absolutely. And you have to think about like the reasonability of why you're incurring the expense, not just meals. And so for meals, most of the time people would just claim meals because they ate out and they have a business expense, which in a way it is okay. But if you looked at the actual purpose of having the meals and entertainment, it has mostly something to do with advertising. So anything that you take your clients out and you paid something for, that would be a full meals and entertainment expense. So it has to be business related. Otherwise, it's going to be just a personal expense that you're trying to run to the business, which really what CRA is trying to avoid, right?
That's right.
And another one thing that CRA hates for some reason are golf dues. So a lot of people use this for meals and entertainment because it's a good way to kind of interact with your client and get your client to converse with you and bond with you and have that relationship. But for some reason, CRA does not like golf dues and golf memberships. So you just have to think about that in a way if you're thinking of tax implications. Yes, it is good to put that in your income statement for accounting purposes for you to see how much of it you're using to generate income. But if you're thinking of tax implications, those are the items that gets added back to your income and calculation for your taxable income.
This actually, I know we hadn't thought about talking about this, but it kind of triggered another thing with mileage. Because some people think that they can count their mileage just driving to the office and home, which is not true either. If you're just driving to your place of business, you can't claim that mileage. But if you're driving to a client's office and then back to your office, that can be claimed. So anything for the business, not just the general business. Saying, if you're doing errands for the business on your way home, you can claim it.
Yeah.
But if you're just driving home, or if you're doing personal business errands on the way home, it doesn't count either.
Yeah.
Yeah.
How can the payroll expenses be organized?
Yeah, so sometimes we just have a payroll, but really we should break it into some different categories so that you have your burden, which is your taxes that go with your payroll. So a lot of businesses get caught with that. They think that they don't need to worry about the payroll expense. Oh, we'll take care of that after. We'll pay our employees, and we don't have quite enough money for the source deduction. So your CPP, EI, and your taxes that have to come off, you're required to take them off for your employees. And a lot of people get caught with that, right? Because they do their T4s in February, and they don't have their source deductions don't match what the CRA expects them to be paying. Yeah. And there's very hefty penalties for not having those.
Yeah, and the reason is, I mean, these are income that you would have given to your employees, but instead you withheld it for you. So this is not really your money to begin with. So, and that's the reason why they penalize it so much, because you're using somebody else's money to kind of have that cash flow in your business, which is not very uncommon in the business, but really you should be putting these aside and remitting it to the government. Otherwise, you're going to pay a huge penalty.
Yeah. Exactly. So the other thing with the payroll is that benefits, we usually put that in a separate line as well, just so that you can see like how much you paid the employee, how much of that was benefits, and how much of it was source deductions. Just again to keep you a little bit more organized, so you can see what's happening in your company.
What should be posted to professional fees?
Yeah, so that's another one that we see quite often, where people just kind of put whatever into there. But really, professional fees are lawyer fees or professional accountant fees, like chartered acccountants, PCA. CPA, sorry. To get those in there. Subcontractors don't go in there. No. Really, bookkeepers don't go in there.
What are other expenses?
Yeah, so other expenses they just don't fit into the expenses. Some of the expenses we talked about. Management fees can go in there. I don't know, can you think of any other expenses?
Yeah, so this one, it's kind of, this is something that we prefer really. Management salaries are really your owner's salaries. I know most of us pay ourselves with the rest of the employees in the same payroll account, but really it's very beneficial that you separate yourself from the regular employees, because this way you'll be able to see how much really is left for you before you take out the money for yourself. And again, you are not a regular employee. There's a lot of stuff that you have to be doing. It's part of the risk of being a business owner.
That's right.
Is you have to spend hours developing your business. So I think it's very important that you separate it from there. Some items, I know if you're incorporated, some people have rental properties that they would put into their business. So sometimes it's a lot easier to evaluate your actual active business income separate from your rental income. So normally we would suggest to put your rental income and activities at the bottom, where it's separate from your regular business. Right. Yeah. Those are some. Is it okay to review the income statement by itself?
Yeah, so we've talked about this in some of our other videos, that it's really important to review your income statement along with your balance sheet. And even more important to review your balance sheet first and then your income statement, just so you kind of get a whole picture of your business and how it's working. And you're not making decisions based on information that is incorrect or not complete.
Yeah, absolutely. There's a lot of anomalies that you could have figured out with your balance sheet that would correct your income statement.
Yeah, and I think it's really tempting to just look at the income statement, because that really gives you the bottom line. Right?
Yeah, absolutely. It tells you what you did.
That's right.
But a whole picture is a lot better. Like it's, especially if you're looking at if the activities of your business are actually supporting the entire company, and in terms of cash flow, for example.
Yeah.
Yeah, so
right.
stuff like that.
Yeah.
Yeah.
Good.
Yeah, so that's all we have for today. I hope you find it informative. If you have any questions or comment, please feel free to put them below in our comment section. Please like and subscribe if you like our videos, and we'll be uploading videos daily. Thanks so much for watching, and I'll see you guys next time.